Hi friends, welcome back to channel P2G. In this channel, we are dealing with the knowledge dissemination on banking related topics. And in this series, let us discuss something very quickly on regulatory restrictions on lending. Okay, regulatory restrictions with regard to lending. When we say regulatory restrictions, means what? The loans which bank cannot give. That's all. Okay, which is not possible by the banks to give loans, and such kind of things we call them as a regulatory restrictions. Okay, which are all those regulatory restrictions? The number one, bank cannot give loan against their own shares. Means if someone is holding the shares of a particular bank, it can't take loan from the same bank. It has to, means the person has to go to any other bank to take the loan, but the same bank in whose name that which bank's names shares are there, that bank cannot give the loan against their own shares. Second, bank cannot give loan against a word called as certificate of deposit. Now, what is this certificate of deposit? We will discuss sometime in the future in a separate video. But you remember this, that bank cannot give loan against certificate of deposits. In the similar manner, there is another word comes, that is a IDRs, okay, Indian Depository Receipts. What is this Indian Depository Receipt? That also we will deal in some other video, but bank cannot give loan against that. Okay, certificate of deposits and the Indian Depository Receipt. Similarly, banks are not supposed to give loan. Banks should not give loan against the deposit held in some other bank. That is a deposit receipt of other bank. I cannot take it to one bank. For example, a deposit is with Canara Bank. That deposit receipt I cannot take it to Syndicate Bank and request for the loan. But now Syndicate Bank, Canara Bank, that's not my point. My point is to just explain you that Bank of Baroda deposit receipt cannot be taken as a security for the purpose of giving loan by Union Bank. Okay. A bank, as I told you, bank cannot give loan against the certificate of deposit. Bank cannot give loan against the Indian Depository Receipts. What I mean that no loan is available against these instruments. A detail about these instruments we will learn in some other video. Okay. Similarly, bank cannot give loan against a deposit receipts of other banks. Means a deposit is with one bank. That deposit receipt cannot be taken to other bank to take the loan. If at all a loan is required, one has to go to the same bank. Then similarly, no loan is available against the gold bullion. Gold bullion means gold biscuits or gold bricks. No loan is available. If at all anyone wanted to have a loan, loan is available only against the jewelry of the gold. Okay, the gold jewelry, and as well as the gold coins issued by the Reserve Bank of India, okay, or Government of India, not on the gold bullion. Okay, and there are reasons behind. We will not deliberate on the reasons. You need to remember these particular points for the purpose of your overall understanding. Okay, the next is no the loan against the partly paid shares. Means in case shares are not fully paid by XYZ, he still has got some calls to be paid. In such case also, no loan can be granted to that particular person. And even loan against shares is not available to other than the individual. Means no company or no partnership firm can approach a bank to take the loan against the shares. If at all the loan is granted, that too only up to 20 lakhs, that only to individuals. Means a person can go and take, provided the shares are in his name, and he can only take, but no company or no partnership firm can take loan against shares. Means okay. So then last but not least is no loan is available to willful defaulters. Okay, no loan is available to buy the open plot. Okay, no loan is available for to purchasing the gold. Okay, there are three important things. What I have told you, no loan can be granted by the bank just to buy the open plot. But an open plot can be a part of your housing project. Loan is available. but only to buy the open plot, bank will not give the loan. Bank will not give the loan for the purpose of purchase of gold, okay, and bank also will not give loan to willful defaulter, okay. So this is what are the general restrictions, and thereafter bank cannot hold shares in the companies of the management, okay. Bank as a bank, it cannot hold the shares of a company in which their own managing director is interested means he is also one of the party to that particular company. It can't be considered as that loan can't be considered by the bank, okay. Similarly, no loan to a firm, no loan to a company in which bank's director is a partner, bank's director is a manager, or bank's director is an employee. It's not possible. Bank should not give, because that is a Reserve Bank of India restriction, hence it is called as regulatory restriction. Then bank also fixes some prudential limit, means a specific cap to a particular industry or to a particular sector, how much can be the loan given, and that's how these particular restrictions are applying on lending to the banking industry, okay. Now I think in this video what we understood, that Reserve Bank of India as a regulator, which are all the loans it prohibits, it restricts, okay. In addition to this, there are many other restrictions are there. For example, ozone depleting zones, okay, ozone depleting that ozone zone depleting companies are there. For them, bank should not give loan. Those are all different things, but as far as Reserve Bank of India restrictions concerned, these are the restrictions bank need to take into account. In our next video, we will discuss something about the features of retail banking, which are all the different retail banking products, and we will have the in-depth discussion on the portfolio of retail banking. Thank you so much for being with me.